The federal government says the energy crisis is over. Commodity prices tumble, sending the local share market to a new 18-month low. And those mighty A380 aircraft previously destined for the scrapyard are making a comeback. It's Tuesday, the 21st of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, a couple of reasons I'm sure you're pretty happy this morning. One, of course, it's the winter solstice. We've been waiting for 6 months to get to the winter solstice. Now we can hang out for the summer solstice.
I reckon we've talked about the winter solstice more than we should have, to be honest.
Okay, so skip that. But that's the reason you're going to be happy. But also a story about planes. You'd be loving that.
Oh, and look, I make fun of you quite a bit for the self-interest that kind of governs some of your story selection. Often it's about, as I say, home renovation or anything that kind of has a bit of a connection to what you're doing in your life. But I really feel like you've kind of done me a solid today and put an A380 story in the headlines, no less, knowing that I love planes. Thanks, Sean.
I'm not sure what a solid is.
It's a young person term. You've kind of helped me out a little bit here, Sean. So, no, thanks for that. Speaking of subjects that are kind of close to your heart, you've mentioned over recent days that you've been having a bit of a battle with the passport office, getting ready for your overseas trip. I'm sure all of Australia, well, at least the portion of Australia that's listening to Fear and Greed, is waiting with bated breath for an update. Have you got the passports yet?
No, not yet. 3 days to go before we're due to fly out. And no passport yet. I have been onto the passport office. The people there are very nice, very friendly, under a lot of pressure. But we are 11 weeks in now and we haven't received the passports for 2 of the kids. So it's a little stressful, Michael.
A little bit stressful. Sorry, I might have hit a bit of a sore point there.
Yes.
But
Let's just go on.
We will look forward to an update tomorrow and hopefully a positive outcome by this time tomorrow.
Oh, wouldn't that be nice? Anyway.
It'll be very nice. But anyway, on to business because that's much less stressful. You've got a really good chat today. David Bassanese from Beta Shares. We've spoken to him in the past and he's always very direct in what he thinks about the economy. And today he's sharing his view on the US economy.
Yeah, that's right. I mean, the big question mark is whether the US will go into recession or not. We talked to David about that. David used to live in the States. He is a bit of an America-phile and knows plenty about it.
No, it's a really good chat. It's coming up a bit later on, but the main story this morning, Sean, Energy Minister Chris Bowen says the worst of the energy crisis down the eastern seaboard is now over and governments around the country are working towards paying generators for capacity rather than output.
In Mr. Bowen's words, the system is working. He's confident blackouts have been avoided. He was speaking after the release of the Energy Security Board's latest information paper, which forecast electricity demand to at least double by 2050. Now, Mr. Bowen said Canberra and the states are working on developing a capacity mechanism. This would pay generators for the capacity they can provide. Now, currently, generators are only paid for the energy they actually provide. The new system would also pay for generators to be available when needed. The whole idea is that there's enough electricity whenever demand is high. The Energy Security Board believes such a mechanism is necessary to ensure more capacity comes into the grid in coming decades, and we'll need that if we need to double our electricity demand by 2050.
So would this then be for renewables only, Sean, or is it for the fossil fuel generators as well?
That's actually a very touchy subject, but the Energy Security Board said it's necessary for the mechanism to access a mix of technologies, including coal and gas. It would also discourage the early exit of existing generators. That's one of the benefits of this mechanism. Having said that, once the mechanism is in place, state governments would have final say on which generators are actually eligible for payments, renewables or coal and gas. And that is a recognition that different states are at different points of their journey towards renewable energy.
So just so I've got it straight, essentially the mechanism rewards generators for having capacity available, which kind of given the doubling of demand by 2050 might be needed.
Yes, that's right, even though it's somewhat economically inefficient. But the government is determined to keep the lights on while the transition to renewables continues. This mechanism is supposed to do that.
All right, big development. How did the ASX perform yesterday?
Well, the S&P ASX 200 closed the day down 0.6% to 6,433 points. It was another 18-month low, and this time it was commodity prices that weighed on the market. Iron ore futures fell 9% yesterday on concerns about demand from China, and that's pushed the big miners lower. BHP and Rio Tinto both closed down 5%, while Fortescue Metals was off more than 8%. The energy groups also tumbled. Santos was down 6%, Woodside was off 5%. Some of the smaller gold miners were among the worst performers of the top 200. At the top end of the gold market, Newcrest Mining ended down more than 4%, while Northern Star was almost 6% lower. Away from the commodity sectors, there was actually some pretty decent performers yesterday. Wesfarmers rose 3%, while CSL, Aristocrat Leisure and Transurban were all more than 2% higher. Property giant Goodman Group rose nearly 4%. Now, the real estate investment trust sector ended up being the best performing sub-index yesterday. The tech stocks did well. The banks were mixed, as were the retailers. The best performer on the day was PointsBet, which has had a bit of a wild ride over the past couple of years. It closed up 19% after a major investment group, Sports Investment Group, in the US bought 13% of the company. The worst two were uranium group Paladin Energy and iron ore miner Champion Iron, both down around 11%. And Michael, the Aussie dollar is trading just under 70 US cents.
And what about global markets?
Wall Street was closed overnight for the Juneteenth Independence Day holiday. The most dominating force in the market yesterday was definitely the fall in commodity prices. I mentioned iron ore prices, but over the past week, copper futures have fallen to their lowest level in almost a year. Other commodities to fall steeply over the past week include lead, aluminium, zinc, tin and nickel. Gas prices fell about 20% last week. Even Brent crude is lower, trading around $114 a barrel. It's also soft commodities. Over the past week, wheat, palm oil, orange juice and canola have all fallen sharply in price. The reason for all this is fears of a global slowdown and maybe even a recession in the United States. And just before we leave financial markets, Michael, Bitcoin jumped back yesterday. We had our main story yesterday about how far the cryptocurrencies had fallen. Bitcoin ended a 12-day slide yesterday. It's trading back above $20,000 a unit.
I just soft commodities, orange juice. It's always struck me as odd that is something that is measured.
Yeah, it's one of the major commodity or soft commodities in the world. Like in terms of volume, it's huge.
It's extraordinary. It just stands out as being a little bit unusual.
Yeah, I mean, I suppose the orange juice is a base to many, many products, just like wheat is and palm oil and canola and things like that.
Oh, okay, there we go. Anyway, not much to say about it, really. I just wanted to draw a little bit of attention to orange juice today.
Fair enough.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Greens leader Adam Bandt won't rule out supporting Labor's bid to legislate a 43% reduction in emissions this decade.
Yes, he said the Greens will approach Labor's policy in good faith and was prepared to have discussions with the government. Mind you, he wasn't really happy about the idea of coal and gas companies being part of that capacity mechanism that we've just been speaking about. The opposition leader, Peter Dutton, yesterday came out and said he'll vote against any emissions target set by Labor. Now, why Mr Bandt's comments matter is that the Greens will have more power in Canberra than it probably has since Bob Brown's days, really. And in terms of numbers, it might even be more than that. With the Western Australia Senate result now final, we know the coalition will hold 32 seats in the Senate. Labor has 26 seats. The Greens have 12. That's on top of the 4 in the House of Representatives. There's 2 each to One Nation and Jackie Lambie Network. And the United Australia Party has 1. David Pocock, the former rugby star, is the sole independent. On those numbers, Labor will need the Greens' support plus one other to pass its legislation.
You mentioned the United Australia Party. So it did finally get a seat, albeit a fairly expensive one.
Yes, the 6th and final Victorian Senate spot will go to Ralph Babet from the UAP. Wasn't really a great election for the party, given founder Clive Palmer spent about $100 million on the campaign for 1 Senate seat.
Wow. All right, just staying in politics, Sean, Home Affairs Minister Claire O'Neill has flown to Sri Lanka to address the rising number of refugees attempting to reach Australia by boat.
There have been 4 boats intercepted by Border Force or Sri Lankan authorities since the election a month ago. A woman on one boat said she'd been told by people smugglers that this new Australian government will allow them in. Labor, of course, has maintained the previous government's hard line on refugees and boat turnbacks.
Sean, how about this one? National Australia Bank has been forced to set up operations in Vietnam and in India to fill digital, technical and IT functions because the bank can't find staff in Australia.
Yeah, this was a story in the Financial Review which demonstrates the lack of skilled technology staff in the country. National Australia Bank Chief Executive Ross McEwen said no matter how hard they tried, the bank couldn't find people to do the work. National Australia Bank bought out its partner in Hanoi earlier this year, hiring software developers, data scientists, digital designers, software engineers and data analysts. It plans to establish a similar hub near Delhi in India.
Sean, Endeavour Group says it will bring forward pay rises of between 4.6% and 5.2% to try and alleviate staff shortages.
It's another example of problems finding the right staff. Now, Endeavour Group employs about 15,000 people in pubs and clubs across the country. It's trying to recruit another 800 people. Under the Fair Work Commission decision last week, the increases in pay for the hospitality sector were delayed for 3 months. But Endeavour Chief Executive Steve Donoghue said he'd fast-track those increases just to try and get enough staff.
Right, now this story, I love this story. We don't talk much about the property markets outside residential. We talk about residential quite a bit. But one sector that's been booming is industrial property. But there's a few market watchers who are getting just a touch nervous.
That's right. The property market outside residential is massive. Many of us hold property shares in our superannuation funds, even if we don't know about it. There's industrials and logistics, and Goodman Group is the market leader in that area. It's been the golden child of property. It benefited throughout the pandemic from the boom in e-commerce and the demand for big warehouses around the country to house and dispatch products. Over the past couple of years, the value of industrial property has increased by more than 50%. It's been a real winner. Then there's retail. Now, that struggled during the pandemic as restrictions shut down shopping centres and the like. The good news out of that sector yesterday was an earnings upgrade from Vicinity Centres, which owns all the Westfield malls. That helped its share price jump 7% yesterday. So retail's looking better. And then there's office, which has held up remarkably well given the whole hybrid work phenomenon. So we have industrial, retail and office. High interest rates are bad for property because that sector is built on debt. So when debt payments rise, returns to investors fall. Now Biz Oxford Economics has come out and said the golden run for industrial property is set to end because of interest rates. There's still plenty of demand around, so it won't be a disaster, but it just won't be as good as it's been.
And this is probably as good a time as any just to remind everyone that we are not an investment podcast, and you should definitely speak to a professional advisor before making any investment decisions. Sean, a couple of quick shorter stories for you. Deputy Prime Minister and Defence Minister Richard Marles is off to India to hold talks with his counterpart.
Yes, the Defence Minister's name in India is Rajnath Singh, and the meeting is part of Australia's concerted push to get closer to our neighbours, particularly given the shadow of China at the moment.
And the New South Wales Upper House will investigate the appointment of the state's former Nationals leader, John Barilaro, to a plum job in New York.
I don't think this one passes the pub test, really. Premier Dominic Perrottet made a captain's pick, appointing Mr. Barilaro as Trade and Investment Commissioner to the Americas. Now, it's a role created by Mr. Barilaro when he was Trade Minister a few years ago. Now he's got the gig.
Oh, that's a little bit uncomfortable, isn't it?
Yeah.
All right, moving on to overseas news and the story that I think we've all been waiting for.
Well, you have. Yeah.
That's right. Not long ago, of course, the world's airlines were all parking their A380s, just housing them in deserts. COVID was disrupting travel. These are massive planes. The mega planes, they were just considered too inefficient. But now, Sean, great news. Some of them are making a comeback.
The incredible rebound in air travel has pushed carriers to get A380s back into service. Qantas has 12 parked A380s in the Californian desert. You might remember the story, Michael. We talked about the person whose job it was to bang the engines of the A380s with a stick to get rid of the rattlesnakes.
Yep. Oh, what a great job that would have been. Just to wander around amidst the A380s, tapping the wheels to get the snakes out.
Well, look, now carriers around the world expect about 60% of the parked A380s will be in the air by the end of the year, according to Bloomberg. British Airways will actually end up operating more A380 flights than it did before COVID. Qantas expects to have 10 refitted A380s in the air in about 18 months' time. It's a real comeback for what everyone thought was far too an inefficient plane to fly.
Yeah, great story. And Sean, you mentioned earlier fears of a recession in the United States, and those fears have really started to take hold now.
Yes, a couple of local bank economists, plenty of international economists all think that the US is going into recession. And as we mentioned earlier on, after this show, stay tuned because David Bassanese gives us his reasons why he thinks it's going to happen. Japanese group Nomura, for example, thinks the world's largest economy will fall into recession later this year. Consumer sentiment's falling, energy and food prices are rising, and the global growth outlook has deteriorated. Put that alongside the Federal Reserve's seeming determination to stop inflation in its tracks, and you're going to have higher interest rates as well, and potentially an economy going backwards.
Yeah, definitely worth sticking around for the Fear and Greed daily interview with David Bassanese. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 21st of June, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.